James Demmert is with us, founder, chief investment officer, Main Street Research. Thank you so much for being with us. Not a surprise to see that the Fed chose not to cut, but of course they leave the door open for cuts, but it's looking like just 4 rate cuts over the next 3 years, and 7 of the 9 members, which is up from 4 of the 19 members, now 7 say no cuts at all this year. What do you think of this?
Yeah, Nicole, nice to see you. And I think that, it makes sense. Don't change anything. Their mandate is full employment or robust employment, which we have, and stable prices, which we're now getting. I think the risk here going forward is, does the economy weaken from here? And I was surprised that they were suggesting inflation may continue to maybe move upward. And I think that's a risk. You don't want the Fed to get too stuck in this very tight policy they have. And we've seen some weakness in the economy by several different areas, which I can touch on. So I think that's a risk here.
Yeah, I do want to talk about that. I mean, as far as the risk to the upside economy, the upside inflation, they took away the most upside inflation. Now they just say there's still risk for inflation, but it hasn't risen. And that, I thought, was interesting to me. They don't see it escalating more and more and more. I mean, they sort of took that language out, which means that they're a little less worried about it spiking to some wild levels.
Yeah, still worried, but not as much. But I think just still worried is concerning because, tariffs and fiscal policy contracting really does slow economies. And then if you put on top of that the soft data, which has been not robust recently in housing and consumer, and on top of it the geopolitical events with oil prices up, that can put a lot of pressure on the economy on top of what we already were dealing with and all that uncertainty. So I think the risk is that maybe it's disinflation, and I'm not sure they're ready for that, which could be a problem for markets.
I'm going to take a sip of this. Sorry, folks. Live TV. Sometimes I'm thinking about a lot of things all at the same time here. The unemployment rate just will tick a little bit higher. I was thinking about stagflation a lot. I'm not thinking about it now.
It's hard to. I think a lot of people got on that wagon, and now they're realizing after 2 quarters of earnings, way better than expected. I mean, earnings were really robust in the first and second quarter. It tells us, like I was just telling my new class of interns this summer, this morning, this is a Goldilocks economy. It's not growing too fast, not too slow, not too hot, too cold, and that's great for stocks.
Yeah, unbelievable. I mean, do you think that the market hits new highs this year? We're not, we're only 2 or 3% away, and we have another winning week on Wall Street right now. I mean, before the show, I was checking, the NASDAQ is up 1% this week.
Yeah, it's hard to believe when we were down, 18% just a few weeks ago, it feels like.
Yeah.
But our view is the S&P could hit 6,800. We're sort of solo out there with a big number.
So you're on the outskirts.
We think it churns higher.
Super bullish.
Yeah, on that.
What will be the catalyst for that?
Well, I think, first of all, if we can stay in this Goldilocks, not too hot, not too cold economy, then you've got the AI productivity growth. The back half of this year, the animal spirits of the market love tax cuts and deregulation. We're just going to start to see that. So we think those influences could really, in a churning, sort of choppy way, stocks go higher. One last thing I will say about that as well. In the last 6 months, many of you might know, stocks have gone nowhere. So the prices are the same, but the earnings have gone up a lot. So price-earnings ratios have shrunk, actually, over the last 6 months.
It's interesting because you talk about the animal spirits, and everybody was waiting for that. They just sort of took a break, is what you're telling us.
They sure did. They went out, and I think they're coming back.
A lot of money on the sidelines, right? What do you think they may be buying? I mean, is tech going to lead us? I mean, you mentioned AI and the productivity there. The tax cuts sort of giving everybody that boost too, a little juice. What kind of sectors do you think could really prevail this year?
For investors looking for ideas, I would suggest obviously the tech, the telecom space, because AI is sort of impervious to all of this. But think about deregulation. Wow, it's a benefit for the financials. If the economy is not growing too fast, healthcare, consumer staples like Costco or McKesson. And don't forget to be a global investor. Gosh, the economies over there are more robust with bigger fiscal spending and better monetary policy. That's why those foreign markets have done better than the U.S.
Yeah, understood. I mean, how worried are we about, inflation really spiking. I mean, I saw one report that said stocks remain higher after Fed holds interest rates steady, but at the top, that's better. The headline that came on my phone was the Fed just jacked up its inflation outlook. It seemed more dramatic than what the Fed's even saying.
It's more dramatic than what the data suggests. I mean, the CPI number last week was better than expected on the downside. So I think that's the boogeyman in this market that might scare people away from being invested, which is a big mistake. I think you want to be invested here. Just be in those right sectors that can do well in this Goldilocks economy.
So let's talk about what we may hear about Jay Powell's speech at 2:30. I mean, he'll give the written speech, and then he's going to have Q&A. What will you be listening for?
Yeah, this is what investors want to focus on.
Yeah.
The decision itself, right, is a non-event. And the press conference really becomes what shapes the market for tomorrow. And
right.
I think on the bullish side, you want to listen for some recognition by the Fed that, yeah, there's weak soft data, that the Mideast conflict could get worse, and if so, we're willing to reduce rates. I think investors want to know that they'd be willing to do it if they saw signs that they need to. I think that would be a bullish outcome of the conference. I think a bearish outcome, which we always want to look at both sides, is that they sort of ignore some of that data in the Mideast conflict and sort of just say we're going to only focus on inflation and we're going to keep money tighter than it should be. I don't think the market will respond well to that.
Yeah, and you see lower rates in this back half of the year, right?
We do. We think the Fed is part of it. We think they're going to end up cutting, even if they didn't suggest so today.
Yeah, playing it close to the vest.
Yeah.
All right. Well, it's great to see you. James Demmert, thank you so much. Founder, Chief Investment Officer, Main Street Research. Thank you very much.